Hi guys, this is Teacher Pati. Welcome to my YouTube channel. Like, subscribe, do the most. So guys, I promised you a video on trading stock. So this is for you to practice hard at home, as we've done it in class. This is just to give you more practice at home. Sorry, guys. So guys, remember, trading stock is an asset. This is the goods that we buy as a business in order for us to sell. Okay? So we purchase the goods and then we put the profit that we want to make and we sell the goods. Remember in class we used the example of the buying iPhones abroad and selling them at a price more than what he purchased them for. Okay, so let's go back to. Just want us to. Do you think it's our shop? I didn't develop this question paper. I found it from Siavula. I think it's Siavula now. Okay. So now we're doing the bank account. So we need to know, were we given any balance? Yes, they're telling us that as at the month end of September, the trial balance, which is where we post this balance breakdowns to, the inventory that we had in our hand, the stock that we had in our hand, sorry guys for the noise, the stock that we had on our hand costed us, was valued at 22,000. So they've told us that it's on the debit side. So the balance brought down for the inventory is on the debit side because you can't oversell what you did not buy. There's no instance where the company will sell what they did not buy. No, that is just taking, in that instance where the company say, give us the money, we'll order for you. It's already an order, but they did not give you inventory that was not there. So there's no instance where you have a debit balance, a credit balance on inventory, on balance brought down on inventory. Okay, so 22,000. So remember, inventory, we're buying it so that we can sell. We're buying it so that we can sell. So now we must look where we purchased the inventory and where we sold inventory. So in the cash receipts journal, it shows us that we sold inventory at 6,300. So now we need to understand what was the cost of the sale. So this is 01, 10, 2. Okay, so now as at 31, 10, 2009. Then there's the cost of sales. From ERC. Okay? But now they've given us the sales, they did not give us the cost of sales. But in the debtors journal here, which is where we make sales on credit, they gave us the amount and D, that is the cost of sales. Okay. So they say our shops uses a fixed markup on cost for both cash and credit sales. So it means we have to calculate what is the markup. So the markup is 18,000, which is the sales minus the cost of sales, divide. So I've shown you the calculation there. So you take the 8,000, you divide it by the cost of sales, which gives you 80,000. Then you say 6,300 times 100 divided by 180, because you're working out the cost of the sale, the inventory that was used, the value of inventory that was used to match the sale. So that happens to be 3.5. So you know in class I say solve for x. So x equals to 6,300 times 100 divided by 180. Then it becomes 3,500. Okay. So cash payments journal, this is the business, our shop buying stock with the hope to sell in the future, but the sale has not happened. In the cash receipts journal, the sale has happened. So you need to know how much was the cost of the inventory that was sold. Here, this is still at the cost price. So you will say bank CPJ. How much is the bank amount? 10,800. Okay. Then the petty cash. This is us taking money from the petty cash to buy trading stock. So that amount is 80 Rand. So which side are we going to put it? This side, because we purchased stock. And our folio is PCG. Okay. Then we go to the cost of sales. Even in the details journal, this is us selling on credit. So our stock decreased. So stock decreased because we sold for 10,000 Rand. Then the debtor was not happy with us. They were not happy with the goods that we sold. So they returned the inventory. So we'll say cost of sales. We'll say cost of sales. J. R1,000. Okay. Trading stock. This is us now buying stock on credit. So we'll just say creditors. Creditors. CJ. This is the amount. 8,900. Then insert creditors allowances. So this is us not happy with the stock that was delivered to us by the supplier. So we returned it. DJ for this journal. So we returned it at 950. Okay. So that's it. So which side is bigger than the other? Obviously the debit side, so we will balance here. Balance. Equals to 42,780 minus 14,450. So the stock we have remaining at the end of the period is 28,000. So guys, I hope you understand this. Thank you guys. Like, subscribe, bye.